Welcome to our second, since we did one last night, live stream Facebook discussion on home buying and home selling. The process, the mortgage process, and all of the details that you need to know to purchase a home or sell a home. So I'd like to introduce our guests, but before we do that, I just want to let you know that all of your questions and comments can come to us by one of three ways. You can either, if you're watching the live stream, just type your question right in on the comments bar, or you can text 646-932-5615. That would be a text, or you can call in at 973-696-6660. So let us know if you have any questions and any comments throughout the presentation. So before we get started, I want to introduce myself. I'm Debbie Brophy, the manager of the Weichert in Wayne. This is Colene Smith, one of our top sales agents, and Marc Peterson, our mortgage advisor. So we'll be the panel today that we're going to just really be chatting about the process and what you would need to know if you're looking to buy or sell a property. So first of all, if you are a buyer, we want to let you know that you can buy a home that you love. It's important that we match up, Colene matches up your wants and needs with a home that you're going to purchase, and then Marc matches you up with the financing for that. So the home buying process is somewhat complex, but we're here to help you with all of that. First and foremost, mortgage pre-approval, right, Marc?
Absolutely.
You want to meet with the customer, right? One or two people, whoever's buying the home, and then what's the process like?
So, I mean, in the beginning, the process is pretty simple in a sense of going through some, basic questions, learning about their credit, their income, and their assets are probably the three main things to help them qualify and see what their buying power is. There is a difference between a pre-qualification and a pre-approval. Mm-hmm. Pre-qualification pretty much is just, having a conversation about what they earn and what their credit score is, not running their credit. Pre-approval is obviously stronger when you're ready to make an offer. Then we get all the documentation together and we verify their income and pull up their credit score and see what their liabilities are and issue a pre-approval and get them on their way to make an offer on the property.
Okay, all right. So they don't really need too much documentation to get to that point, right?
Right.
So that's really their purchasing power would be the safest way to
correct.
To
yeah,
say?
But we do talk about moving, what could be headed down the road when we get into, submitting the loan, into underwriting and getting all those approvals. So we talk about what's going to, happen during that process and what additional documents may be needed.
And that's smart because if they need to get some stuff in order, they have some time to do it.
There's a lot of moving parts to it, and and we just need to prepare them that there are going to be some items that might come up that underwriting wants to look at just to verify.
But a first-time home buyer too, shouldn't be afraid to sit down with Marc. It's the pre-qualification really takes maybe 10-15 minutes. Could be a phone call, could be in person. It's pretty informal.
Right.
Nothing to be scared of. So I think especially a first-time home buyer, it's important to note that it's really just the beginning and just to get a quick viewpoint of where you're at.
Yeah. Right. And like you said, and that goes with the consultation to the realtor as well. Mm-hmm. Don't be afraid to ask questions. Right. That's what we're here for. Mm-hmm. So as many questions as you may have, ask them because it is important and you need to know everything.
Right.
So
after they meet with you, Marc, you determine that they have a range of homes that they can look at as far as price goes, right?
Right.
Colene, what do you do from there?
Yeah, so now we sit down with them and do a buyer's consultation where we sit down and we actually go over, discuss what your wants and your needs are. We learn more about maybe what areas you're looking at. We want a better understanding of your buying power, what your comfortable mortgage monthly payment will be. Mm-hmm. We go over all those things, and then I can actually narrow down the search from there, and we start going out and looking for homes.
Wonderful. That's the part everybody likes.
Exactly.
Okay, so we find the home they love, right? Next steps.
So next step, you want to make an offer. So you'll sit down with your agent. We'll pull up recently sold. We'll go over comparables for the home that you're wanting to purchase, and we'll discuss together what we feel is a fair, offer to go in at.
And you would do a written offer at
We
this
would
point?
do a written offer. At that point, I would write up the offer, and again, it is a long real estate contract, so don't be scared of it. It's people do this every day.
Yeah.
It is a lot, but I'm here to go over that with you briefly. We basically want to get the offer in. There's a couple main points we just want to go over, and that's obviously your offer price, how much you're going to put down. We want to know what you're comfortable as far as closing, what date to close on, exactly. And there's going to be a negotiation typically,
Right.
back and forth. Once both buyer and seller have signed the paperwork, then it goes to the attorneys and they actually review it in more detail with you.
And as a seller, if there's any sellers watching, a lot of times sellers, they focus on the offer price, right? That seems to be the most important thing, not realizing that the other factors of the offer that Colene is pointing out are equally as important. If somebody comes in and makes an offer and wants to close tomorrow, can you close tomorrow, Or if they want to close in 6 months, does the seller want to wait that long? So the closing date, the deposit monies, this all really matters.
Absolutely.
So, okay, so let's just say we get that offer finally accepted. What are some of the next steps that you are both involved in?
For me, I would, recommend a real estate attorney. It's very important that, the attorney they use is familiar with the real estate process. There are many attorneys out there that do multiple things, and it's really important that you have someone that concentrates in real estate, because you don't want to be in a situation where you can't get a hold of your attorney, they're in court or what have you. So as your realtor, we work with many attorneys and can recommend one that we feel would work well with you, and then we send it off to your attorney for their review and their comments, and they'll make changes.
Okay,
100%.
so an attorney review process, and during that process, are they usually applying for the mortgage around that time?
Yeah, so around that time too, I'll take over the other end of it, and we'll get everything verified, like I said, and then we'll give them a bunch of disclosures to go over and look at and make sure that they understand that they're going to start proceeding with the mortgage end of it, and then we submit it to underwriting to have them look at it and verify everything and get that mortgage commitment.
Good, good. So this is all kind of happening at the same time.
Yep.
Right? Okay, so after attorney review, I know there's other steps.
Yes. After attorney review, then we move into the home inspection process. And again, that's another area of vendors that we use every day, and we know who is good and who isn't. And it's important that the buyer be present for the home inspection. So we have to, come up with a date that works. Your realtor should also be there for the home inspection. And it can be a process, depending on the size of the home. If it's a 1-2 bedroom condo, the home inspection might take about an hour. 4-bedroom colonial could take anywhere from 3 to 4 hours. Yeah. Multifamily's longer than that. So you do have to be prepared. I mean, it's your home, you're spending a lot of money. You want to make sure you know the ins and outs of the home.
So as a professional real estate agent, when you're looking at a home, there are probably certain elements of the home that you could even determine if they may be problematic just from your own professional, background.
Absolutely.
And if there's something that's obviously that you see that kind of jumps out at you, do you usually point that out to the buyer?
Absolutely. Again, as a professional, we do have that experience, and we can kind of see that in advance, but that is not what we do. We
Right.
definitely let you know that, a home inspector can be more diligent and let you know for sure what's going on.
Behind the scenes,
Right.
behind the walls type of thing.
Mm-hmm.
Okay, so let's just say we get through that, right? I know there could be some negotiations of home inspection issues.
Absolutely.
Let's just say we get past that, right? What are some of the next steps to get them to close?
Well, next would be the appraisal, right? The
Yep.
order of the appraisal.
Yeah, the appraisal's around that time too, and the appraisal is basically them coming in to look at the home, make sure that it's livable, and determine the value of the home. That way they can submit it to underwriting for approval.
Is that a separate person that's hired by the bank to come in and appraise a home?
Correct.
Right?
Mhm.
Okay.
Yes.
All right.
Yes.
So-
And that's a lot quicker of a process. So that's, maybe 10, 15, 20 minutes.
Right, it's
Yeah.
completely different than an
Yeah.
Right.
Yeah. Now I know from time to time when we go to a seller, we have a seller meeting, and they may say they just had an appraisal done on their home, right?
Mm-hmm.
How do you handle that? Because they obviously whatever buyer comes along is going to need to do their own
Right.
appraisal, right?
It's not, a seller doesn't have to pay for that. It's, paid through
Buyer.
by the buyer through the mortgage process.
Right.
And honestly, We have no, say whether or not that can be done. That is ordered by the lender, so
Correct.
we have no choice.
Right, and sometimes there may be a slight difference in the kind of results of the appraisal for the seller versus a buyer's appraisal, right?
Right.
Because you have two different sets of eyes really
Yep.
determining the value. They're usually pretty close though, would you say?
Absolutely, yeah.
Okay, all right, so we get through all of that, you happy, give them the mortgage approval, right?
Mhm.
They clear them to close, so how do we get them to the closing table?
Okay, so now, next week, your attorney will set up the closing, and just, it's important to note that the date on the contract isn't always the exact closing date, but your attorney will let you know typically within the week of what a confirmed closing will be, and they'll set up a time that's convenient, and also prior to that, we have title, right?
Yes,
So
yes.
title,
Right.
is
Title
doing.
work and insurance, right?
Yeah.
Homeowners insurance.
Make sure
So
that
that's
everybody's
again
aware.
all being done kind of in conjunction with your end of this, Mark, right?
Correct.
Making sure that we have the insurance in place, title. In fact, it's the title company that usually does the closing in
Yes.
in New Jersey.
Yep.
So the title company is very much involved in setting up that closing and all. And I think the final steps really would be just really a walkthrough and
A
attending the
walkthrough.
closing, right?
Absolutely, making sure that the utilities have been,
Mhm.
changed in your name. Both the realtor and the attorney usually work in hand and letting you know exactly who you need to call and what you need to
Okay.
do.
So finally then, we also, have obviously moving into the house, so we have services that can help them with the moving in. So we sort of cover everything, right?
Absolutely.
Yep.
And, at Weichert, we call it all under one roof. You both mentioned a lot of the details, a lot of different things that we do offer, such as an attorney, right? A selection of attorneys, selection of home inspections, inspectors, mortgage, title, insurance, home warranty. We have so many things that we offer all the way up to the moving vans, right?
Yeah, it's
So
great.
it could be all done in one place, all under one roof. Convenient, super convenient for the buyers and sellers, right? To
Absolutely.
be able to use all of our services all over
Yeah.
the place.
And
Because
today,
even the seller, right? Like sometimes they will need a mortgage to move on to where they're going,
yeah,
right?
absolutely.
So they need many of the services.
Yeah,
we
in
offer the
in
buyers.
today's world, people want the convenience, and they don't want to be bothered with anything, and we take that stress out for them,
Sure.
and we take care of it all.
Right.
Perfect.
So we call that all under one roof. We have a question
Okay,
coming
Jessie
in.
has a question directed to Mark, and she'd like to know what her options would be if her credit is good, but her income is on the low side.
Okay, so an option would be if her credit is good and the income is on the low side, she can always consider a co-borrower. That would open up more
It's
income
like a
for her.
co-signer.
A co-signer.
Co-sign?
Yeah. So that would open up probably more income.
So what
to
would
her
the
to purchase the
requirements,
house.
just to add to Jesse's question, what would the requirements of a co-signer be? What are you looking for in a co-signer?
Well, I mean, same thing. I mean, if they're gonna be attached to the loan, they have to go through the same criteria and get all the credentials, from them as well, and make sure that we consider the debt that they carry as well. Make sure that their credit is good, but you are adding that extra income that would help her qualify for this property.
Okay, so a co-signer, so somebody trying to help somebody out to purchase a home, particularly in the case of, and this directed right at Jesse, I mean, if you have a certain income level right now, but expect that maybe your income is going up, this is a real great alternative, taking advantage of
Absolutely.
the low rates we have now, right? Getting into a house now, while the prices are even a little bit lower, and being able to purchase that home now and sort of grow into it.
Yeah,
So
absolutely.
to speak, right?
Yep.
But the co-borrower would also have that on their records as well, right? That
Yep.
they co-signed for a loan.
Yep, they're carrying the debt as well.
Okay.
Jessie also wants to know if there are any special programs for first-time home buyers. Is that still a
It's a good
possibility?
question.
Yeah, so there are certain programs for first-time home buyers. Typically, the first-time home buyers, there are 3.5% programs for an FHA. There are some 3% programs that are out there for first-time home buyers, but obviously there's a lot more criteria that comes to that when you're going down to the 3%.
And 3% meaning that's the down payment.
3% down payment. Yeah.
So Mark, a first-time home buyer, does that mean they never owned a home before, or is there a certain length of time that they haven't owned a home and they consider them first-time buyers again?
No, it's them never owning a home.
Strictly first home, right?
Correct.
Okay, and we're seeing a lot of first-time buyers now, Colleen?
Yes,
Right, especially with the
absolutely.
millennials being very
Yep.
active in purchasing homes, getting married, starting families. They want a bigger place if they're living in a condo or renting.
Right.
So there's a lot of opportunity really if you have programs for first time buyers, because we have so many first time buyers.
Yeah,
And
absolutely.
With the millennials too, a lot of them enjoy their pets, and that's a problem
Oh,
when you're
yeah.
renting.
Yeah.
So they like to, get into.
Yeah, and we were
single
touching on
family.
that on last night's episode.
Yeah.
So it's about renting and buying and the
Right.
differences.
Yeah.
So, which I'm
Yeah.
sure we'll
Yeah.
talk about that again today.
But Colleen's making a good point
Yeah.
in the fact that if you own your home, and it's it's primarily like a single family home
Mhm.
where you don't have a limit on 2 dogs, a
Right.
cat, what's the weight of the animal?
Yeah.
Because we do deal with many people that are still looking to rent, and a lot of them have pets,
Mhm.
and it's not just a little tiny iguana.
Right.
It's
Sometimes
tough.
they're
It's
big
tough.
dogs.
Right.
Yeah. So very good point you make. So we have some questions ourselves
Mhm.
that many buyers wonder about. So one question is, how long does it take to find a real estate agent? And that obviously could take
Couple
a
days.
very short time
Yep.
or a little longer, right?
Right.
So what are the sources of how people usually find their
Sure.
realtor?
So it's important to find, first of all, a realtor that you do mesh with, that you do connect with. A lot of folks will find one through a friend of a friend or through family. But also they also interview you, believe it or not, at open houses. They'll come to open houses and they want to see how you handle yourself, how you handle the home, if you're connecting. So it's definitely something to be aware of. It's one way of doing it, and I enjoy it. I love open houses. I love meeting new people, and I invite everybody to come to my open houses. And just it's a great way to get to know someone and to see, because it is important that you have to
Sure.
connect with them.
Yeah, because it's a process.
It is. We're
You're
going
going
to
to be spending some time
Mhm.
together. So
Absolutely.
you want to make sure that they, really, that you are able to service them the way they want to be serviced. pretty
Absolutely.
much. So it's a relationship building. How long does it take to get approved for a mortgage, Mark? That question comes up quite often.
It does. So typically it's about 7 to 10 days.
Mhm. That
when-
sounds like a real short period of time.
Yeah, it's
A lot of
fast.
people
It's
get a lot
fast.
longer.
Depending on how busy underwriting is, it could be even a little bit faster.
Okay.
But typically it's about 7 to 10 days.
7 to 10.
Yeah,
okay.
for the mortgage approval.
And that's once all the paperwork is in, the documents
submitted,
are-
verified,
Okay.
yeah, and then we can
Okay.
get the mortgage approval.
Okay, so another question is, how long does the appraisal take? So that's part of, would you say, outside or inside of the first question?
I think it runs along the same line in the sense of, time-wise, 7 to 10 days from the time they come out and take a look at it. They have to come back, do all their paperwork, submit it, into the system, and then send it over to the bank and make sure that they verify it as well.
But I believe a lot of these things are sort of working concurrently with each other, right?
Yeah. I mean, there's, like we kind of touched on, I mean, there's a lot of moving parts to it. So
Right,
there's a lot of
right.
things going on at once to make sure we hit the closing date.
Okay, so how long would it take for an offer to be accepted, Colleen?
So I guess on average it takes about 3 days.
Okay.
An offer can be accepted, within the same day, but on average 3 days. Usually there is a back and forth negotiation, depending on how hot the house is, how well priced the house is, if there's multiple offers. But I've seen it go longer as well.
Yeah.
But average 3 days.
Okay. I mean, that's a fair answer, because I know I'm sure some of them could be immediately if
Right.
the offers are a really strong offer, and some of them could take a little bit
Right.
longer, right? But that, that's kind of a sort of a word of advice for a buyer to say, it's not over till it's over, really, right?
Right.
If you're still negotiating, and even though you may seem like you're quite a distance apart, doesn't mean it's not going to happen. Right, because sometimes we are negotiating over a long period of time. We mentioned last night a deal that I had myself, that the offer came in pretty early on in the list period, so it wasn't, really as close to full price as the sellers would have liked. So they figured, well, there's probably another offer coming tomorrow, and the other offer never came in. So basically, we kind of negotiated back and forth over several months, believe it or not.
Wow.
We started, I believe, in October, accepted deal sometime in February. So we just, the buyer did not find a house that would fit them better. The seller did not get a better buyer, so
Yeah.
we made that buyer fit.
Wow.
So, it was a very successful closing in the end, but a long negotiation process.
Sure.
So how long, we talked about the appraisal, but how long does it take to get to a closing on a
So to get to closing, I would say on average it's about 50 to 60 days. So you can figure on about 2 months. Mark and I have done it quicker. We've done it in 30 days, which is fantastic. There are some reasons why some folks need to do it that fast. But average is 60 days. Also, I've seen it go longer. I've seen it 3 months. Sometimes folks have to sell in order to move in. And so there's a lot of moving parts going on, and we're juggling a lot. There's a lot going on behind the scenes that both the seller and the buyer sometimes aren't even aware that we're managing.
But that brings up a very good point in the fact that if a closing is longer, by choice, what happens to the rate, Mark?
Well, I mean, when you talk about rate, you're talking about locking periods. So, and as long as we, lock it for a certain amount of time, your rate will not change.
Okay. And what's the longest you can lock?
I mean, you can lock in for 90 days if you want.
90 days, okay.
Yeah.
So if a closing happens to be longer than 90 days for some reason, like Colene mentions that somebody might have to sell their home in order to buy, that could go, indefinitely. So what if they need that rate locked in longer? Are there some options?
Yeah, so there are some options. I mean, there are extension periods that, we can get into and talk about.
Okay.
The options of maybe seeing what the market does and maybe letting the rate expire and playing off, so to speak, what the market does and relocking depending on how the market is trending. So there are a couple different options to talk about if that point in time comes.
So it seems as though you work with the buyer.
Very closely. Very closely.
Yeah, that's smart. That's smart.
The buyer needs to know, though, they have to talk with us. They have to share with us what's going on. We can't help you if you don't tell us what's going on, where you're at. But we do have the solutions as long as you keep us informed.
Right.
And one more question for you that we kind of skipped over is, how long does a showing take?
So a showing, again, depends on how large the home is, but on average, I like to schedule 15 minutes per showing. And, the buyers will typically know, within the first 5 minutes when they walk into the home, whether or not it's a possibility for them. But I do like to take the time and show them the entire home. Again, depending on the size of the home, it could take a little bit longer. As we mentioned last night, of course, if they really are loving the home, they do want to spend a lot more time there and really look at every detail. So, but on average, I like to schedule about 15 minutes.
And how many homes do you show, like, in an average appointment that you would have with, let's say, a prospective buyer?
So I typically like to show around 5 because it can get overwhelming and it can start getting confusing. They start to confuse what house had what feature. So I like to try to keep it to 5, and I like to recap actually as we leave the home, go over what was it in this home that you liked or what you didn't like. Almost finding out what they didn't like is just as important. So I like to kind of so I can make my notes and I can keep it straight as well. And then also when I'm if none of those homes work for them, when now I'm looking for more for the following time, I know when I'm weeding out.
Well, that's why it's important to really know their wants and needs, really, down to the smallest points. Because if you're going to show them only 5 homes in an afternoon, you want them to be the 5 best suited homes.
Absolutely.
So and I know some buyers are not really married to a town. So if they're looking in multiple towns, sometimes the inventory, all told in their price range might be rather large if they're looking in multiple towns. So, all right, good. So remember this. Oh, we got another question.
Yeah, Paul has a question about credit. Wants to know if his credit score is affected every time a lender or a bank runs credit.
Good question. So the bank, so the FICO, there's a provision when it comes to the FICO and running credit that they consider, if you're shopping for a mortgage, a one-time hit, so to speak, on your credit score, which is very small, but there is a certain amount of time that you can, or they do consider that you are shopping for a mortgage and you don't get affected in that certain period of time. Inquiries. So multiple inquiries are fine within a period of time.
Okay.
Yeah.
All right. Well, that kind of makes sense because a lot of people do that, right?
Yeah.
They're going to shop around, get the best mortgage rate. This is something you're going to have for a while.
Right.
Right. So, so the fact of the matter is that they would be probably surprised if somebody didn't do it.
Yeah. So they understand that you're shopping for a mortgage, and so they just consider it a one-time pull.
Right. Good question, though, Paul.
Yeah.
Thank you. That was Paul's question, Paul?
That was Paul.
Okay.
Paul also wants to know what kind of things affect his credit. I mean,
that's a good question.
What kind of things affect his credit? His credit score. So I mean, if you start running like if you go to department stores or department store cards, you're having them run your credit, that affects your credit score a lot.
Another thing that affects credit score a lot
Negatively.
more.
Negatively.
Yeah,
Yeah, in a negative way.
but another
It's
thing
not
that affects
positive.
the credit score that surprised me, probably even more than having a lot of debt, is being late on payments.
Late on payments as well, yeah.
Mhm.
Yeah, negatively affects your credit
Right,
score.
right.
Yeah.
Yeah. What about just having another thing that surprised me at one point was that I found out that if you didn't have enough lines of credit, it actually hurts your credit.
Yeah, I mean, that could affect your credit as well if you don't have enough
Yeah.
lines. So it is.
So it's like a fine line.
Yeah, I mean, so it is important to make sure that you do have revolving credit, pay it on time, have
Mhm.
enough lines open. That's going to make your credit score go up and
Right.
work for you in a positive way.
Another case of where you come into play, right?
Right.
Because
right,
you can certainly
right.
take a look at this and make some advice.
Right, especially, I mean, if their
examples
credit
of
score is a bit lower, we could talk about that and what
Mhm.
we can do to improve it and get them where they need to be to,
Right.
to help them
Right.
get into a home.
So
Right.
don't be afraid if you think you do have a low credit to speak to Mark because he can offer suggestions on what you can do to increase it.
Yeah,
Absolutely.
correct.
So we have some buyer do's and don'ts, right? Do know your credit score. We're talking about credit right now. So most buyers that come to us have a good idea about where their credit is. Sometimes they're off by 10 or 20 points, but they kind of have a good idea.
Yeah.
Because there's so many sources of finding the credit now.
Right.
Right? They can go to Credit Karma, Credit Guru, they can go right on to Experian, they can go through their bank
Their own
many
bank,
times, right? Maybe they did have their credit checked and everything's pretty much stayed copacetic. So they're gonna know if they're in the 600, 700, 800 range,
Mhm.
right? They'll probably know that. But of course, we always do have to double check that, right?
Of
And
course.
the banks will double check it closer to the closing as well, make sure that that stayed static.
Yep.
Determine your buying power. We talked about that already,
Yep.
right? We don't want you, Colleen, taking out somebody that's looking at a $550,000 home when they might be qualified for a $400,000 home, right? Because it's only really it's kind of a tease for them,
Absolutely,
to
it's
see a house they
disappointing.
can't get to,
Yeah.
So finding the buying power first is very important, right?
Yeah.
Before you go. And surprisingly, even now in 2020, there are buyers that come to us and say, I'm looking to spend, not really knowing what's the payment on that, whether they're qualified for that, whether they have enough income,
Mhm.
assets, and everything for that. So finding out your buying power is very important before you even get started.
Yep.
Right.
Also knowing the property's value, right? I know we've talked about we're gonna have an appraisal done, right? We're gonna know the value, but that's after the fact, right?
Right.
So Colleen, you talked about running comps
Right.
and knowing what's going on in the market and what's selling for, what price points.
Absolutely. I mean, I know that a lot of folks feel like they can access this information online through Zillow and Realtor.com and Trulia and all these other sites, but it really is in your best interest to speak with a professional because we can pull up recently sold. We can look at the difference of property size, square footage of the home, number of bedrooms, number of bathrooms, garages. I mean, there's a lot that goes into
Yeah.
comparing the home that you're purchasing and what's been recently sold.
Sure.
So that's where our expertise comes in.
Yeah. So as you're looking at a home, even though it might appear to be in the price point of your buyer, if you get there and what you're seeing is a home that probably is overpriced or underpriced, you're going to be able to advise them.
Right. Absolutely.
Okay.
Absolutely.
All right. And then, of course, we want to remind people to work with a skilled realtor. There's obviously, if you're not, kind of getting this from our chat today, it's important what we bring to the table as real estate professionals, right? As a mortgage professional, we want to work with professionals on this, right? This is not a DIY
Right.
job,
Right.
and a lot of people think that they can do it as a do-it-yourself, but they do find out. The process has so many different phases and, there could be so many hiccups along the way. So you want to work with a professional realtor. So some of the don'ts, right? This one could be tough for some people, but don't change jobs, right? If you have some job consistency, job history, with the exception of a recent grad, starting a new job,
Yep.
if you're in a job and you're looking to buy a home, it probably is best to stay with the job.
Yeah, I mean, they look, underwriting looks for a 2-year history typically. They want to see stability.
Right.
So, staying at that job for that period of time, it shows that you're a stronger buyer, for sure.
Sure. Yep. Another don't is don't buy a new car. It's my favorite
Or
one.
lease.
Or
Yeah,
lease the
or
car.
lease.
Same
Same
thing.
thing. Yeah. Yep.
Yeah.
So this is very tempting to people, right? We especially in New Jersey here, we like to trade in our cars a lot. You know? So we're trying to tell them to basically kind of keep everything where it is.
Yep.
Until we get through and close on the house.
Until
Then
we
they
get
can do
to
whatever.
Then they can do what they want. Yeah, but it's another conversation that we do have in the beginning to make sure that they understand the do's and don'ts, because that could really affect the whole deal.
Right.
Don't make big credit card purchases either. That's going to affect your loan.
Yeah, absolutely.
All very much tied together.
Right.
Everything's
the
tied
don'ts,
together.
right?
Yep.
Don't co-sign. We talked about co-signing before from the other angle, right?
Right.
I'm the buyer, I need help, you're my co-signer, great. But if you're somebody looking to buy a home and looking to borrow money, you probably don't want to be the co-signer for someone else, right? Because that debt becomes your debt, right? So now you talk about debt to income ratios.
Yep.
That changes everything, right? Because now your debt ratio just
Absolutely.
went up. Did we have another question?
Yes, there's another question from Stephanie. It has to do with, it's a general question, it has to do with the state of the market. And what she'd like to know is, currently, is it a buyer's market or a seller's market?
Stephanie, I love that question. We actually have something coming up that's going to address it. But I will tell you right now, I've been in the business for 17 years. This is probably one of the most active buyer seasons in January that I've seen since I started 17 years ago. Really a lot of buyers out there. You guys are seeing it.
Yep.
We have multiple offer scenarios going in. So from that, Stephanie, we can kind of conclude it's probably pretty much a seller's market right now in a lot of our areas, but not every town is the same. Some towns are, we could have a seller's market in the middle of all buyer's markets.
Right.
Just because the town is super hot, it could be a seller's town, seller's market town.
I think that's a good point because I do feel like buyers don't understand. They feel like it covers the entire area and it doesn't. It is really town by town.
Yes.
It can be a seller's market here in Wayne. It could be a buyer's market in Pompton Lakes.
Yeah.
So it really does matter.
It's even area specific, believe it or not. There are sections you could take a town, especially a township-sized town or a city type of town, where there's zip codes within the city that are hotter than others. And they could actually be a seller's market in a certain zip code and a buyer's market in another zip code.
Yeah.
It's really, it's incredible. But that's, again, another plus with using professional realtor,
Exactly.
right? So guys, don't forget, we got some text message questions coming in. You can either live stream your questions, call them into 973-696-6660, or phone them into 646, I gotta look at this closely, 932-5615. So we do have them on the bottom of the screens, on many of our screens, but if you don't remember that, the phone number is 696-6660, and if you're watching live stream, just type your question right into the comments. Makes it right nice and easy. This is a fan favorite, right?
Yes, we got a lot of comments on this last night.
Yeah. So we still till today, believe it or not, this office itself does about as many rentals, tenant side rentals, as we do buyer side sales. Can you believe that?
Yes.
Right, with the rates being so low and all. So I think we've concluded that a lot of people think they can't buy. Right? Would you say that's kind of a safe?
Absolutely. It shocks me how many people come to me because they want to rent, and when I find out what their price point is, I try to educate them and introduce them to Mark to show them that they can buy. It's they really don't know, and it's shocking. Shocking.
Right. And as you mentioned, we were discussing offline that you said a lot of people just they come from families that rented and they've always rented. And it's not really a matter of they want to change their where they're living, their residency every 2 years. That's typically not what we hear. We just hear people thinking that they need a large down payment. They can't afford to get a mortgage. The mortgage process is so cumbersome; they're never going to get through it. All different things like that. But really, to rent a home, Mark, I mean, we were talking about how they need to have a month of security, a month and a half security, a month of realtor fee, a month up front. They're coming in with a couple of $1,000s right there. So that fear of no down payment, they still need somewhat of a down payment. Very much like leasing a car, A lot of people think if they're going to lease a car, they have no money to come in, but a lot of times there's money up front even on the car lease.
Right, and to add to that, this is what we were talking about last night, that there's so many people out there that we come to find that they don't even realize that, you can put less than 20% down. I mean, there's still people that really thinks that you need 20%. For the down payment, and it's not that way anymore.
You probably see more that are under 20 than over.
Yeah.
Right?
Yeah, but there are when you talk about renters, they don't even realize that you can put a minimum down payment down, and that money that you're putting towards the month and a half security and the realtor fee and the month up front.
Right.
I mean, you could use that towards down payment for
That
your
could
own
be the
home.
down payment,
That could be the
absolutely.
down payment.
Yep,
Right.
Yeah.
So we have an example here that's kind of an interesting example of in this market that we're in Wayne. So I did a little bit of research. For $2,000, 1,100 square foot, you could rent a 2-bedroom, 2-bathroom apartment that is in a complex with a fireplace and balcony and a community pool. Maybe like a townhouse or a condo, right? At 1,100 square feet for $2,000. At the same time, that same $2,000 can buy you a 3-bedroom, 2-bath home in Totowa, also with a fireplace, maybe a deck in the backyard, maybe not a pool, but it is a house, and you own the house, and you got the land with it, right? For the same $2,000, right? So I think a lot of people don't realize how much those two numbers could be the same.
Yeah.
We're very close, right?
Yeah, for sure.
Right. So so if you are renting now and you do kind of aspire to own a home, look at what you're paying in rent. And when you compare it to what you would spend on a home, that might be exactly the home size that you're looking for, or you could always buy a home and then trade up in a couple of years. But what you're going to spend on your mortgage, even with taxes and insurance, is probably not that far off from what you're paying right now.
Yep.
The only difference being that you're accumulating wealth, right?
Mm-hmm.
And that's why we call it the American dream,
Building
right? Because it's
equity.
building
Yeah.
equity. So so the renters out there, come speak to Mark. So the biggest advantages, of course, of home ownership, other than what we mentioned already, is owning something of your own, right? Is the equity that you're building, right? So you're gaining wealth, you're gaining equity, you have something coming back out when you go to sell it, right? It's similar. Again, I'll use the trade-in,
Right.
the car trade-in, right? If you own a car versus a lease of a car, when you go to trade the car in, you might get some money out of it
Sure.
too, right? So, but with the difference between a car and a home is homes generally appreciate.
Yep.
And you're paying part of it down too, and you're getting that back.
Yep.
Where in the car case, usually they'll depreciate. If you wait long enough, you're really not going to have that scenario.
Right.
So it's not a great example, but when you own it, you do have, obviously something to trade in if you trade it in early enough. Of course, the tax deduction. And we certainly caution everybody to discuss this with your professional accountants. If you have a tax accountant doing your taxes, but there are usually some level of write-offs. They may be minimized if you're in an alternative minimum tax, or certain a price point where your tax rate might be a higher tax rate, but you're going to get some level of a write-off, both on state and federal income taxes, right? So sometimes we talk about a slight difference in the mortgage payment being slightly higher than the rental payment, but when you take this into consideration, it could actually be lower,
Yep.
right? Because you're saving on taxes. So instead of giving it to the government in the form of taxes, you're actually paying it down towards your mortgage, right? Sounds like a good idea to me. Of course, there's credit too. So when you own a home, you have something that you could borrow against, right? If you wanted to take your equity out and use it as a loan to yourself,
Yep.
or as collateral. So there's something that you could borrow against by having a house. Of course, the stability. So most of your loans nowadays are fixed rates,
Yeah.
right? So your principal and interest from day one stays the same pretty much, right?
Yep.
Things like taxes, homeowners insurance, those things vary.
Yeah.
But your principal and interest, the base of this whole thing never moves.
Never
It
changes.
doesn't move. So
Yep.
so very exciting. Very exciting. Our favorite guest has arrived. So of course, hello. So of course, well, this is live. We have to say hello to the audience. Come on in. Of course, you could have lower payments too with the mortgage versus what you're paying in rent. Because the one thing that can be said about a solid principal and interest staying the same is that if you are renting and you're renting over a number of years, your rent's probably going up.
Yeah.
Right? So this way, your payments in the end, 2-3 years in, might actually be a lot lower than what you're paying in rent.
Right.
If you continued renting. So a lot of really great features to being a homeowner. And of course, that's where we all come in, right? We're in although we do rentals too, but we're looking to really, help them accomplish the American dream.
Absolutely. And
For
I
our
think
buyers.
too, I mean, the fans maybe can tell us if they would be interested, but maybe we should do another segment on buying a home maybe that needs work and the type of
Oh,
loans
yeah.
that you can get. There is something that, would actually give you the money to renovate. So,
Yeah. We actually saw one of those today, didn't we?
Yes.
And
yes.
a really, really great buy here in Wayne.
Mhm.
That with a renovation loan,
Yep.
not even that much, right?
No.
Not all that much.
No.
You're gonna have like a gorgeous home, gorgeous
Right.
home. And those of us that watch HGTV, Busman's home,
Yep.
we can appreciate. I got my mind's going a million miles a minute. We're gonna take that wall down. I'm gonna put the cabinets.
Yeah.
Yep.
Okay, so we've got some myths. We have buyer's myths, we have seller's myths, right? And these myths we have heard over and over again. So they didn't just make the cut. We live this, okay? So, Mark, you mentioned about the 20% down payment, right? That's
Right.
one of the myths. A credit score of 640 or better may not be required. We're gonna give you the answers to these in a minute. It's cheaper to rent than buy, and we covered that a little bit, right? In this area, not necessarily the case. At all homes will sell for under list price. Everybody thinks that one's gonna happen. And don't have too many lenders check your credit because it'll hurt your score. So some of the questions we got actually answered some of the myths already, right?
Yep.
Right.
Because I wasn't surprised at the questions because we do hear them a lot,
Yeah, a
right?
lot.
So the truth of the matter is we certainly do not need 20% down. And the majority of your borrowers you're seeing are under 20% down, right?
Yeah. I mean, you can go as little as 3.5% down. Some programs offer 3.
Yeah.
So I mean, it's out there. You don't need
Yep.
20% anymore.
Yeah.
That's
So
for sure.
3.5 on a $300,000 home, you're talking about a little over $10,000.
Yeah, for the down payment.
$11,000.
Yep.
Yeah, that's again, to get
it's
into a
minimal.
rental, you bring in a chunk of that.
Yeah, I mean,
you're-
on a
you're close.
$2,000 rental, you need $7,000 to get
Yeah.
in.
Yes.
So I mean, you're not that far
More
off.
than halfway there.
Yeah.
Credit score is 640.
Oh, hang on.
We got another
In fact,
question.
there's a question talking about down payments. There's a question from John. He's asking about if there's a minimum down payment for a 2-family home.
See,
We haven't
yes.
talked about the multis.
No, so that's a good question, and a lot of people think when you get into the multi-family homes that you need a larger down payment. You can actually use an FHA program for a 2-family home,
With the 3.5.
3.5% down.
Wow. And that would have to be owner occupied, that 2-family?
Yeah.
Mhm.
Yep.
Okay. So, it brings up a great point, though, and thank you, Phil, for asking the question for the call-in. It brings a good point to the fact of the matter that a lot of first-time buyers realize that if they do buy a 2-family, there's some income coming in,
Yeah.
right? That kind of reduces the mortgage payment right there, right?
Yeah.
So, you're paying your mortgage, but somebody's helping you. Right?
Yeah,
You have the
absolutely.
second floor or the first floor, wherever you're renting it
Right.
at.
And
So
the lenders
2-families are extremely popular.
exactly, and the lender's looking at that as well.
Mhm.
When they're looking at
Yep.
whether or not to approve that.
Right.
And it is, it's a smart investment, and I see that a lot with a lot of the younger buyers now being savvy about that. They're buying 2-family
Sure.
homes. They're moving into them for a certain amount of time as they're increasing, their income with their
Right.
jobs. They're moving up the ladder, so to speak, and then in a number of years, they're moving out into their new primary home and keeping that home as an
Isn't
investment.
that crazy?
Yeah,
I
very
love it.
smart.
Yeah. And we have somebody here, one of our agents, that's actually doing that
Yeah.
right now too.
Yeah, it's very smart.
Okay, so 640 credit score. What's the deal with that?
So that's not true. So now it's 620 is typically the floor.
Okay.
To qualify, there are some programs that do go below that, but 620 is typically it.
Okay.
So yeah, you can go
Okay.
below 640.
That's very exciting because
Yeah.
a lot of people are in the lower 6 range when
Right.
they come to us,
Right.
and we can get them right into it.
Yep.
Right. It's cheaper to rent than to buy, so we talked about that and talked about it a few times,
Mhm.
right? In this area, not necessarily the case, and actually, there's parts of the country where it's more expensive to rent than buy.
Mm.
In the United
Wow.
States. So there are markets like that where the home prices are so reasonable that the rents are actually higher.
Yeah.
So in those areas, you certainly hope that you have a lot of home buyers that are aware of that. And then, of course, all homes will sell for under list price. So when we have a buyer, we're starting with a buyer, Colene, and tell me if I'm wrong, they always assume they're going to take a percentage off every house you show them, right?
Right, absolutely. And that's not necessarily the case. So depending on the seller and how educated they are on the market and really how the process works, if their home is priced correctly, it will sell either for ask or above ask.
And we mentioned the multiple offers before, right? That's when that happens, right?
Exactly.
So for our seller audience, you really can't underprice a house. I was in a discussion with another agent today who said that she knew the house had to sell quickly, put it on at 20,000 below where she thought it would sell, and it sold where she thought it would sell, because and yet obviously sold it very quickly, right? Because they got that kind of frenzy going that all these buyers wanted the house and they just bid up on it. So so the price of the house a lot of times will find its level, right? So underpriced, so you're not going to get a discount on every house out there, right?
Yeah.
Some houses we can, on other houses we absolutely cannot. And then of course having too many lenders check your credit. I think we talked about that, Mark.
Yeah,
Right?
yeah, we did.
With anything to do with the mortgage business, mortgage lenders,
Yep.
they're looking at it as like one single
Yeah, that there's a window of time that they understand that you're shopping.
Good, and that should be very reassuring to the buyers,
Sure.
because I think of all the myths, that's the one I probably hear the most
Yeah,
at this
me
point.
too. People are nervous about that all the time.
Right. So so not to leave out the sellers, we've got some seller myths. The seller determines the sale price of their home. A lot of sellers think that they're going to say, this is what my house is going to sell for. Trying to sell on your own will save you money. We'll tell you what the real deal is with that. You can increase your list price by the cost of home improvements you have made. This is an important myth to break through, because a lot of people are putting a lot of home improvements in right now, right? Lowe's and Home Depot are doing great, right? All the hardwood flooring companies, everybody's doing some renovations. Overpricing a home results in a higher sale price, and the agent with the lowest commission will net you the most. So those are sellers' myths. So those of you that believe it, we're going to tell you what the truth is. The sale price is actually determined by the buyer. The buyer, right? The market and the buyer.
Yeah.
If there's multiple buyers looking at a house and they're all bidding on the house, the price is going to be determined by the highest bidder, right? So a seller, another question coming in.
Yeah, Jean is a seller of a home. She owns a home and she wants to know if she should wait till the spring to sell her home.
Oh, that is a lovely question. Thank you, Phil, and thank you, Jean. The spring market actually is started already. And actually that's not different this year, just because I mentioned a lot of buyer activity in January. The spring market generally starts on January 2nd, only because January 1st is a federal holiday.
Right.
But the spring market starts very, very early, and it goes very late. So we use the term spring market very loosely. It's not really a spring market. It is just the holidays are over market, and everybody's out shopping for a house market. So we are in the process of getting to the height of the spring market already, and it's just January 22nd. Okay, so best time to list your home, probably for Jean, would be right now. As soon as she's ready, get it on, because we have our spring buyers out already. Okay, but it brings up a good point about the holidays, right? A lot of people think, well, there's no activity, it's the holidays, nobody wants to show their home, nobody wants to see homes. We had the busiest holiday season in 2019 that I've ever seen, with buyers looking straight through. We were negotiating a deal on Christmas Eve, and we actually made the deal, right?
Yeah.
So a lot of activity right through the holidays. So to answer the second part of Jean's question, which I'm adding myself, there really is no good time to sell your home. All times are good, and there's no good time to buy a home. All times are good, right? It's a market that just keeps going. So thank you for your question. Trying to sell on your own will save you money. So generally, 2018, we don't have the 2019 numbers yet. 2018, 8% of first sale by owners successfully sold their home, right? With a lot of effort, right? They had to do their own open houses, marketing, etc., right? Believe it or not, they netted about 6 to 7% less than if they used a real estate agent. And those of us that know what real estate agents charge, a full-service realtor will probably charge a 6% commission. But you're making it up right there.
Exactly.
So kind of in the same position with a lot less aggravation, right?
Yeah, we would do all the work. You don't have to.
Absolutely. You can go out to the movies while you do your open house. You can increase your list price by the cost of home improvements you've made. The actual fact of the matter is, in the Northeast, they get about 65% return on their investment. So even if somebody just completed a project, maybe it's a new bathroom, maybe it's a new kitchen, and they spent $30,000 on the project, or $40,000, they're not getting $40,000 out, right out of the gate. Right? Even if they haven't cooked a meal in this kitchen or taken a shower in the bathroom, they're still going to be reduced by 65. Well, they're going to get about 65 to 70%, so about a 30% reduction on what they spent. So therefore, for the sellers again listening, if you're looking to make a lot of home improvements to sell your house, you're selling it as soon as you're done with these home improvements, you probably shouldn't, because you're going to wind up spending a little bit more than what you're going to get. Okay.
Do the improvements so that you can enjoy it and live it.
I love it. That's what I tell everyone.
We have
Another question.
Emmanuel has a question about buying a house. He says he's found a deal on a house, but it needs a lot of work. Is there such a thing as a loan for renovation in addition to the mortgage that he can use to help him?
Yeah, and we were just touching on that. Yeah, we do offer renovation loan programs. They are out there, and they do give them the money for the improvements of the house.
So in other words, they determine what the value is today, what it will be after improvements, and that's what the appraisal is really.
Yep, correct.
Now that can be done both at an FHA and a conventional level, right?
Yeah, that's correct.
That's exciting. So tell Emmanuel to buy that house. Okay. So overpricing a home results in a higher sale price. Well, what overpricing tends to do is have the house linger a little longer on the market. And when the house lingers, it tends to bring a lower sale price, which is a little bit opposite of what everybody believes, right? So we don't want to overprice a home. We want to price it to the market. And in the case of the example I gave you before, if somebody's very aggressive, they could price below the market and winds up selling it for market.
Right.
Okay, but again, the buyer determines the price, the market determines the price. So if we overprice a house, it's just going to make the process a little bit longer, right? And of course, the agent with the lowest commission rate will net the most amount for the seller, and that's what sellers think, right? But a full service real estate broker will do so much to get the top dollar that they're actually netting you more. Okay, so the higher commission sometimes will actually result in a much higher sale price. Okay, so sellers remember that. So, Colene, you're an excellent real estate agent.
Well,
so
thank you.
why should somebody use you?
So, well, number one reason is you want to work with an experienced professional, someone who is familiar with not only the market, but the towns that you're looking at, the process, and we're going to get to this too. They'll manage the whole process and keep a timeline. We are project managers. And you want to make sure that you're working with someone who has that experience, and that you want that level of confidence. So it's important.
Also to have their best interests in mind, right? You're always representing them, and always advising them what to do.
Right.
And we mentioned even in our previous chat that we had that as a real estate professional, we really go beyond the scope, right? I mean, so somebody moves into a home 6 months later. They need some kind of a plumber, an electrician, pediatric dentist, or some kind of advice about something local to the area. Maybe they were new to the area, so a lot of times they wind up calling the real estate agent. And I've had a number of things that I've been called in on that have nothing to do with real estate. And I'm sure you have as well. So, and we'll continue to have that, right?
Yes.
So a real estate agent does become kind of a trusted advisor on many levels. Of even before and after purchase of the home. So remember that, professional real estate agent. So why should you use Weichert? Well, Weichert, we like to look at it as like a journey. So we have a journey map, right? And the journey map is the process, and the process is a number of steps. We talked about all those steps, right? But when you use a company like Weichert, we actually have a piece of each of those steps, right? So we can advise you. Colene mentioned attorneys, home inspectors. But then we have the actual process itself built right within our company, right? Weichert has a title company. Weichert has homeowners insurance, right? That works with all of these outside carriers to get the best rates for homeowners insurance for all of our buyers, And we hear that over and over again, whether they're first-time buyers or repeat buyers, that the rate we get them is so phenomenal that they switch their insurance to us. It's not just about rate, the service is incredible too.
Right.
Our title company does our closings, everything is spot on. They're usually way ahead of everyone else, as far as getting to closing. So, and of course, mortgage services. I mean, numerous programs that we can match these buyers up with the best program for them, right? And give them service that Colene's buyer is using Marc's services and using title and insurance. She is so in control of this transaction that your buyers could be working, visiting family and not worrying about this piece, right?
Mhm.
So we are really an all under one roof company where everything can be done in one place.
Yeah.
And it's important to remember that because we live in a world of convenience now. People want things to be convenient,
Yeah.
right? I was amazed when I heard what Peapod does for Stop and Shop.
Mhm.
Who wants groceries delivered to their house? Tons of people use Peapod. I run across the Peapod truck all the time.
Yeah.
I thought for sure that would never take off.
Yeah.
So who was wrong on that one? So it's all about the convenience, right?
Yeah.
They want their dry cleaning delivered to their door. They want everything picked up, delivered, and just make it so much easier so that one piece of the puzzle doesn't have to take up time in your life.
Convenience and immediate satisfaction they
Mhm.
want. So and knowing that we all work together,
Right.
very tightly.
We communicate.
Yeah, it
together.
makes all that happen.
Yeah.
So
Yeah.
we give them the instant gratification that they're looking for.
Mhm.
So
So we
and
know
give
they
them-
like the convenience, right? The coordination of it,
Mhm.
but it is also cost effective.
Yep.
Because generally speaking, the way we do the job, we're actually going to save you money in the end. So, and who doesn't like to do that?
Right.
So that's why you want to use Whitebit, right? Convenient and cost effective. Okay, so the state of the market. Who was the caller that asked the question about this?
That was
Stephanie?
Stephanie.
Stephanie, we're getting to your question. So we like to look at absorption rate when we're talking about state of the market. So what is absorption rate? Kind of turnaround time of our inventory.
I like
And
that.
what's our inventory?
Mhm.
Our inventory are the houses out there, right?
Mhm.
So we're looking for the amount of time, turnaround time, that we would deplete any given market. Okay, so say we have 100 homes on the market in any given town X, and 25 of them go under contract every month. We have basically a 4-month supply of homes. If no one else listed and every house stayed on the market, in 4 months, we're done. We're out, right?
Right.
So that's what we call our turnaround time. So the number of months, now that number it's not a realistic number because houses are always coming on the market and going off the market.
Mhm.
But it gives you a good idea of how long to expect
Mm-hmm.
your home, if you're selling, to take, right? To sell. And the same with a buyer, how much time do I have? If there's competition, I have to move quicker, and so we know that number reflects a lot. I'll never forget going into a seller's house and she said, well, how long is it going to take? How long is it going to take? How long is it going to take? And I told her what the absorption rate was. And the absorption rate at the time was 9 months, which was a buyer's market.
Mhm.
Okay? So I said to her, it's 9 months. She goes, what does that mean? And I said, well, the average home could take 9 months to sell, but you could be below or above average. We sold her house on the 9-month anniversary
Wow.
of the listing. So I'm like, boy, I looked like a hero.
Right. And
I
doesn't
told
the,
her 9 months and it was 9 months.
and doesn't the price point too add into that factor?
They're married together because in a market where the absorption rate is low, the prices are going to keep ticking up. Okay, and where the absorption rate is high, and
Mhm.
we've seen absorption rates up to 30 and 40 months when the market was down. That's when your prices are coming down. So it's an appreciating versus depreciating market. However, there is, just like everything else, a normal market. So a 5 to 6 month absorption rate is your normal market. That means there's enough inventory to satisfy all the buyers. There's not too much competition, but the sellers are getting good money.
Mhm.
Pretty much, we are not at 5 to 6. We're not at a normal market for most of the area around here. We're under the 5 mark, which means that it is still a seller's market. So Stephanie, we answered the question mostly that it's a seller's market right now. There may be small pockets of a normal or buyer's market out there. We don't see too many buyer's markets right now. That means as a buyer, Stephanie is a buyer, she sees a house she likes, she wants to move quickly on it, right? We don't want to linger on that. For a seller, they can put their house on the market at a fair market value. It's going to sell pretty quickly, and they may have multiple offers, so they should just be aware of that. And how's their agent going to handle that? So I love this slide, the cost of waiting, right? We talked about, I mentioned today to you this morning that a year ago the rates were almost 1% higher than they are right now.
Yep.
I almost don't remember that,
Mhm.
but it's true. It's true. They were almost 1% higher. So when we say, well, if you wait, the rates could go up 1%. There is a reality behind that, right? Because
Sure.
the numbers have gone up and down by 1 or a little more
Mhm.
percentage over the last few years.
Yeah.
So let's say somebody's looking to purchase a home today, right? $300,000 home. We'll use an example of 5.25 interest rate, which is higher than it is now, right?
Right.
They're buying a 350 home at 5.25. Their payment is X, right?
Mhm.
If they wait and that interest rate goes up 1%, that same 350 home with the same down payment is going to cost $177 more.
Yeah.
And over the life of the loan, if they stayed in it for 30 years, $64,000.
Yeah.
That's amazing.
$64,000 question, right? What's the cost of waiting?
Wow.
Yeah.
So it could cost you $64,000 on a $350,000 home.
Right.
And this, really doesn't matter when we say 177, what the starting point, what the end is. If they're 1% higher,
Mhm.
that's pretty much what you're losing on the 350, right? So again, in a seller's market, a buyer wants to buy a home, they're qualified, they're ready, they see a few houses they like, they need to move on, right? Because if they linger and say, I'll think about it, let's wait, let's try to save up some more money,
Mhm.
they could be behind the eight ball,
Right.
right?
Absolutely.
Okay. Oh, another question.
There's a question here for Colene from Ingrid.
Okay.
She'd like to know how can her family be assured that she'll get the best price possible in a house?
Well, it's a good question.
As a realtor, I would definitely take a look at the recently solds. I would do basically a market analysis. We're going to take a look at the comparable homes that she's making an offer on, and it's going to be discussed. I'm going to have an open conversation with you. I'm not going to tell you what I think the price is. I will offer my advice, and I will show you what the comps are. And of course, it's a lot of the starting offer is based on where you're at, what you feel comfortable with. And I would just advise you, my professional opinion, but you are the one who makes the decision, and I follow what you want to do. So I'm there to work for you.
And as an added safety net for Ingrid, we have an appraisal, right?
Mm-hmm.
Right.
So Ingrid, I'm assuming, may be asking that question because she is a first-time buyer that's maybe a little bit skittish with the
Right.
market, right? So she's going to probably take a mortgage, and she's definitely going to have an appraisal done,
Mhm.
right? The appraiser is your safety net from overpaying, right?
Right.
Right.
So how does Ingrid know she's going to get the best possible price for a home? We know she's going to get the fairest possible price
Mhm.
because even if she goes over,
Mhm.
the appraisal is going to determine what she can actually spend on that home.
Right. So the lender will not allow you to pay more for a home than they feel it's worth.
Right.
Pretty much. So there's
So you
there's
have
an
those
extra
two,
safety
right?
net.
You have those two opinions.
Good, excellent. So Mark, why should we use you? Mortgage advisor Marc Peterson, extraordinaire. So what's going on?
So I mean, if you take a look at some of the charts here, you can see where the rates have gone from, the years through. At one point, 1982, they were above 15%.
Mhm.
So the mortgage payment on that was
Yeah.
astronomical. especially compared to what they are today.
Sure.
So and then
Yeah. So I mean,
and you see it all the time.
a lot of our
historic
buyers'
lows.
parents might have had those rates,
Yeah.
right?
Right.
Yeah. So when they talk about historic lows, you see it all the time advertised. it is true.
Yeah.
So it makes a big difference in your payment.
I think, would it be fair to say that a lot of people have gotten numb because the rates have been low for a while, and
Sure.
they're thinking now they're going to be low forever, right?
Yeah. And it's,
But we
it's
know
not the
that-
case.
Look at this.
Yeah.
You talk about 1982, but even in 87 it was 10%.
Right.
So we're still that's so much higher than where we are now. We're in
Right.
the upper 3, low 4 range.
Yeah. Absolutely.
You're way off,
Yep.
So yeah, the rates. Look, they could stay that way for a while, but nobody can determine that,
That's right.
and they may not stay there. So we are at the lowest point. The
Don't
one-
forget about the cost of waiting.
Yes.
Right.
But the one thing that can be said for anybody out there that thinks that the mortgage rates are going to go to 2%, probably never going to happen,
Right.
right?
Yeah.
So if you're in the 3 to 4 range right now, that's probably not going to see lower. You will see higher though,
Right.
right? You will see higher.
Yeah.
So tell us what that's all about, because that's pretty cool.
Yeah, this gives you, sort of a graph on, for instance, a $300,000 home in, 1982, for instance. It tells you right there. At 16% on the interest rate, you're paying $3,600.
In 1982, that's a lot.
Yeah, you
money.
fast forward to
Yeah.
today. You're looking at, a 3.65 rate. You're almost, you're half the cost, more than half the cost on your principal and interest.
Yeah.
You do have, your taxes
Taxes.
that are involved, obviously, but the difference on that payment is, astronomical.
So even though home prices have gone up, obviously, in this
Mhm.
time frame, and we talked about perhaps a millennial and their parents, right?
Right.
And their parents might have been in the 1982 range
Mhm.
at the 16%, and now they can buy a home at 3.65. Without the taxes factored in, that millennial might be paying for the same type of home, even though the house price is up, might be paying less than their parents were paying for principal and interest.
Right.
That's crazy.
It's crazy.
It's crazy.
Yeah.
You know, and in reality, I was in that market in the early 80s,
Mhm.
and the principal and interest was higher than what I'm seeing now.
Yeah.
It really was. I could remember. Of course, you know, your first house, you kind of always remember that, you know.
Yeah.
And it was higher than what you're doing now with,
Right.
with houses of a higher value.
Right.
So it's just such an impactful
Yeah,
difference.
it really is.
Mhm.
It really is.
So what kind of loans? What kind of options
so
for
these
loans?
options are probably, I mean, these are your most popular. I mean, you
Mhm.
have your conventional, your FHA, USDA, and your VA loans. Your conventional loans, you know, typically are for the buyers that have a higher FICO score,
Mhm.
bigger down payments. It does look stronger in the eyes of underwriters when they see that. You know, maybe they consider it a little bit more of like an A paper, so to
Right.
speak. Your FHA loans are typically lower FICO scores, lower down payments, but it allows you to get into a home, you know, with a lower down payment.
Right.
I mean, that's the whole beauty of that program. You can do all that and get you into a home. And then you have your USDA and your VA, which you can do 100% financing, which is great.
Wow.
Yeah.
Wow.
So,
So,
I mean,
what are the what do you
I mean,
need
so
to
I mean, so
qualify for those?
there are little, you know, there are things that need to be, you know, in the qualifying ranges as far as you know, veterans.
For the VA.
For the VA, the USDA, you know, you have to make sure there are income restriction limits. Certain areas have to make sure it's approved, the property of where the area is, usually rural.
Mhm.
Excuse me.
Like a Sussex County, Vernon,
yeah.
somewhere up
Yeah,
north
yeah.
In the state.
But those options are there to
Yeah.
have those done.
Yeah. So they look at it on a case-by-case basis. Right?
Correct.
Right?
Correct.
I mean, a veteran, obviously, with a VA loan, most people know whether they're qualified or not for that, right? Because
Right.
they're a veteran buying the home, right? Or a
Right.
veteran, you know, one of the
Right.
spouses.
So yeah. So I mean, that program just might be the option for them.
Mhm. Yep, but 100% financing, that's
Yeah, it's great.
crazy, yeah.
Yeah.
Now you're talking about, you know, you need less in your pocket to start that than rent.
Yeah,
Because
absolutely.
there is no veteran advantage to renting.
Right.
It's only in home buying.
Right.
Right?
Correct.
And the same could be said about the USDA if they're buying a property in those areas,
Yep.
right? And they qualify for that. It's amazing. It's
Yeah.
amazing. But even something like the FHA and the conventionals can be so low with the down payment, right?
Yeah.
And don't forget that with, I believe, all four of these types of loans, they can actually do a seller concession. So they can
Right, they can
build
get their-
in closing costs.
Right. That they can all be covered, you know, if that works out.
Mm-hmm.
So,
Yeah,
but
yeah.
yeah, again, I mean, when you're talking conventional, you don't need any more than the typical 20%.
Right.
I mean, conventional loans, you can go as low as 5% for a
Amazing,
down payment.
yeah.
It's great.
Yeah. So I think that's probably, I lied and said that, you know, the one myth was the most popular. Really, the 20% down is definitely still number one. Right?
Yeah, yeah,
They
absolutely.
just always, you know, I hear it over and over again, and I'm like, and I think, you know, that probably has subsisted because in their parents' generation, maybe their grandparents' generation, you did need 20%
Right.
down, right? There wasn't, you know, any programs with PMI and different things like that
Yeah.
you could take advantage of that. So, somebody did ask last night, and we might want to just mention it again, about a gift letter
Mhm.
for a down payment, right? So let's say somebody wants to put 5% down or 10% down, but maybe they don't have the full 10. They
Right.
can be gifted some
Right.
of
So
that money.
they can be gifted money for, you know, for down payment from a family member. You know, the process is easy to get it done. I mean, it's pretty much just verifying all of the assets to make sure
Right.
that they're there. You know, a letter needs to be signed by all parties, and they can gift them that money for
Wow.
the down payment.
Wow.
Yeah, so
That's
so
great.
there are a lot of options.
Because we do see a lot of parents want to try to help their kids out,
Yep.
you know, and they want to get them out sometimes because they want the kids to move out of their house.
Yeah. Yeah, and that
we
was,
know that's true.
Yeah, and that was a good question that came in last night,
Yeah.
and you know, you do get asked that a lot.
Mm-hmm.
So yeah, but you do
Yeah.
have those options.
Yeah, yeah. And with an FHA, I believe you said that they can gift the entire down
They can gift the entire thing. The conventional, you know, you have to have a little bit
Right.
money
Right.
in your own account,
Right.
but yeah, FHA you can do 100%.
So I think we can kind of summarize this in saying that there's really not a lot of reasons to not buy a home today.
Yeah.
Right? Rates are low, prices are still down from the height, right? Most people can qualify for something.
Yes.
For something, right?
Yeah.
And if they
Absolutely.
can't, you can put them on a credit diet and fix this pretty quickly, you know?
Absolutely.
So there's really not much of a reason. I think, we hear standardly, I always ask renters why they're renting, and some of them are of a transient nature, and they know they're transient. Maybe they're here for a year for a job assignment. That I get, completely get, because when you're buying a home, you want to, keep it for a while. But the majority of our renters really are just, under the wrong impression of what the whole process is about.
Yeah.
Absolutely.
They're afraid of the mortgage process.
Yeah.
They're afraid that
And it
their credit
doesn't-
might not be good.
Absolutely, and it doesn't just apply to single-family homes. Folks that are renting, you can also purchase a condo, a two-bedroom, one-bedroom condo. So when we say you can get into home ownership, we really, there's so many options out there. You really need to just call and talk to someone and just really find out. I mean, you will be amazed. Really.
Yeah, it's worth the 10-minute conversation.
Absolutely. And to make this all easier, we actually have a mortgage app for you, Mark.
Yeah.
And it's most of our listening audience will have a smartphone, because a lot of them are watching us on a smartphone. So on a smartphone, you have your apps, right? And some of those apps are, pretty much worthless in some cases. Games that maybe you play once, never go to again.
Right.
But a mortgage app, I actually use your mortgage app all the time. Because the mortgage app is, first of all, it's an app with your face on it, so it's kind of easy to find because I'm looking for your face, So an example is right there, right? So when I open up your mortgage app, I can use a mortgage calculator. I can get a quote, right? So if I'm a buyer and I fall in love with this $450,000 home with, $10,000 worth of taxes, I could plug it into your app and you calculate the payment for me, even if it's at like 11 o'clock at night because it's in the system, you know? So we can get a quote. You can apply for a loan right through the app, which is crazy. It also has rates, like a rate chart, so if you don't believe we're at a low, you could look at the rates, and a mortgage calculator, which I think is phenomenal. And not only that, they can actually, they don't even have to put your number in their phone, because right from the app they can call you, text you, or email you.
Right.
And then Colene is your partner in this case. They can call, email, or text her as well.
Yeah, all the information is it's attached. Yeah, I love this app.
It's incredible.
And it's free. And it's free.
Yeah,
So,
free app again, and everything is secure, so everything gets sent directly over to me, and it's a secure portal.
Right. So I'll mention our phone number one more time, 973-696-6660, 973-696-6660. If you want this mortgage app, we can do it right now from our phone to your phone, right, no matter where you are. So just call our office, or if you'd like to call in another time, Marc Peterson, Colene Smith, Debbie Brophy, any one of us can help you with that, or any one of our Weigert sales associates can help you with that, with sharing your mortgage app. So really, in summary, we're here to help. That's why we are here. We're in a service industry, right, guys?
Yeah.
Right? We're not selling a product as much as a service, right? Because the product we're selling isn't ours, right? It's somebody's home.
Right.
So we're here to service the sellers,
Educate.
service the buyers, educate, hugely educate, and simplify the process. Because we want the home buying and selling experience to be phenomenal, not be a headache, not be something that you're going to groan when you think about it in the future. We want somebody that's going to smile just like you, Mark. When they think about buying their home and getting a mortgage through Mark, buying the home through Colene, they just feel good about it, right? So it's all about a really good experience. And of course, home ownership itself is a phenomenal experience. And we'd like to see more people experience that, right?
Absolutely.
So, okay, guys, that's pretty much it. If there's any last minute questions, we'll keep the phone lines open. We'll keep the live stream going for another 1 minute. So call in 973-696-6660 or ask the question on the live stream, and we will get to you. If your question comes in after we're off, we will answer it. So keep an eye on that. Okay, and you could watch our videotape. We'll have it replaying on the Weigert Wayne Facebook page. So thanks for joining us, and thank you guys for your time.
Thank you.
Thank you.
All right, and I hope everybody learned something and had a great experience.
Yep.
All right, thank you.
Bye-bye.
Bye.